misconception number one, that ESG investing outperforms. It is a very mixed bag, very mixed, to the point where you can say it's almost 50-50 shot at outperforming or underperforming.
This is an exciting episode for me. I have Charlie back. Charlie, you've done so well. You've had this chair the most so far. Thanks for coming back, Charlie.
No, absolutely. Thanks for having me.
Awesome. Dime after dime. Today, we're going to talk about ESG and this, what seems to be kind of a bit of a groundswell around values-based investing. And I think I'm excited because there's going to be some hot takes here because maybe ESG isn't the right path, right? But how can we still align our portfolios with our values? So no better person than Charlie. Let's dive right in.
So ESG, right? This has been around since kind of the early 2000s. I think the UN actually gave it that acronym for environmental, social, and governance back in 2004. Early adopters of this were really the Europeans. All the big sovereign wealth funds, et cetera, really took that on early, and now it's got more of a groundswell after 20 years of it being out there in the field. So the question is, how do you align this with your investment goals? The real answer is, what are your goals? Are your goals more of the about environment and pollution and climate change and how companies are run? Is that more important, or is it returns? And we can get into more of that detail in a bit. But it's possible to do, and you can align your portfolio with what your beliefs or your ethics are. And there's a number of ways to do that.
So what do you think, and I that I come from the technology side. And so about not even 10 years ago, we saw a bit of an uptick in software companies that developed with this whole ESG messaging. What do you think is the driving force behind this enthusiasm around ESG?
Well, I think there's a couple of things. Yes, there are all kinds of tools that can be used now that can score and really, pretty accurately score all of those factors, your social factor, your governance factor, your environmental factor, and roll that up and do screens on it. And a lot of it's very interesting. What is the swell behind all of this? I think it's like everything else. We're just much more aware of it. We as the folks in the United States, and certainly Europe ahead of us, just much more aware of these issues. They're more talked about. It is front of mind. We're having political debates about this stuff, which we didn't really have 20 years ago.
Yeah.
So it's kind of coming to the top of everyone's mind now.
So what I think is fascinating is, social demographics, right? We have, there's ways to define a category of individuals, Generation X, Millennial Generation, et cetera. And most people think that's actually just a time box, right? Most people think it's like a 20-year segment or 23, whatever that number comes out to being. But social demographers, or those that study demographics, are saying, no. It's actually not time boxed. It's event boxed. There are certain events that people experience that categorize them into Gen X, for instance. And why I think there's been this pickup in ESG is because the new modern investors, millennials in particular, but also Gen X, experienced things in their lifetime that have driven them to this ESG mindset. One of which being the corporate Enron scandals.
Mm-hmm.
And
I remember
watching their parents suffer with stocks blowing up and people's lives being devastated financially, which in turn vilified corporations.
Yep.
And I think that flight we're seeing to this ESG mindset is actually driven by the experiences they had as children.
Oh, I think that's very so. When you watch, your parents' 401k go to nothing, that's going to scar you. When you see accidents happen, companies that have, maybe not spent the time or the effort on their, whether it's pollution control or spend enough time on their board and their board makeup. When you see, you think about the pay scale differential. This one gets people really frosted, and that's when you have the CEO making $100 million and the average worker making 50 or 70 or whatever. That is enormous, and that hits and really punches Gen X and millennials really in the gut. I have two 23-year-olds, and they ask me why. How is that fair? And I don't really have a great answer for it.
Yeah, no, I think that in reality, we all, as humans, probably want the same, some of the same values, right? And some of that could be more, not meritocracy, but more equity or equitable, when it comes to salaries. So that does, taint or affect these modern investors and where they want to put their money, right? But so let's shift gears a bit and now start talking more about ESG and whether or not it is the promises that it makes, right? And so I've seen studies where there's higher returns or it truly is meeting your values. But then you see the flip side of that coin where it's saying, well, there's some smoke and mirrors and those returns aren't as great. And quite frankly, at the end of the day, even if you're driven by values, you need to achieve your retirement goal. So What are some of those misconceptions and kind of things that folks need to look out for?
Well, misconception number one, that ESG investing outperforms. It is a very mixed bag, very mixed, to the point where you can say it's almost you got a 50-50 shot at outperforming or underperforming. There has been no really good evidence that this is a way to outperform the market. So if that's the case, then it really comes down to how strongly do you feel about ESG as part of yourself, as part of your ethics and part of your values. How do you want to do it? Do you want to target it after companies that you can screen for that score well? Do you want to have somebody else do it for you in an ETF? You have to just decide how much you'd want to allocate to that. How important is it to you? Versus trying to find a real outperforming strategy. If I just said that it almost doesn't matter, it's not really been proven to outperform, well, then you need to have a mix of what you want that's ESG because of your values and your social social wants and needs versus really trying to gun for outperformance.
That's perfect, right? And when you think about it, separating performance and values aside from ESG, when you have a modern investor that's, just say looking in that direction, what do you think are some of the structural or financial or other implications that they might not see or know about when they're so motivated by, again, their values?
Right. Tough question. I think that there's a ton of information out there, and I think that especially the younger generation really knows how to get their hands on it to really identify and evaluate some of these opportunities that are out there. I didn't realize. Do you know how big the ESG market is? I looked it up.
No idea.
So the global market, including the U.S., is about $130 trillion. ESG investing, or with some sort of a ESG emphasis, is about $25 trillion. It's significant. And that doesn't mean that is whole hog ESG investing. It just means it goes into the thinking or the calculus of why that money is invested.
Wow. So that almost seems like too high of a number for ESG when you really think about it, right? If 20% of the investable world, if you will, some $25 trillion, so those are all ESG aligned.
But remember, it could be somebody has a choice of in your portfolio, or a manager that you hire, or a financial advisor giving you advice. Philip Morris Tobacco or Home Depot. What's more aligned with you? Well, I'll take Home Depot. That's a decision process there. So it's just these are all assets that are available. It's just what steers you toward one versus another.
I mean, I do remember all these scorings too, where there was a time where I think it was, I'm not going to say the asset manager's name, but they were actually scoring companies based on these surveys they're taking.
Oh, absolutely.
And you could, in effect, as a corporation, I'm not saying game the numbers, but there's ways to achieve certain ranks within this ESG profile based on certain things you've done.
Yeah. Oh, absolutely. I mean, it's a big business now. And, companies most of them take it very seriously now. You got whole departments that's what their job is how do we move up the ranks? What programs do we need to put in place? What kind of marketing do we need to do? What do we need to change? What do we need on social media to let people know that we are trying to achieve higher and higher goals on the ESG score?
Sure. So I think you're converting someone here. Not that I was ever a big ESG proponent, but I still have values, right? And we all have values, certainly. How could we look at that ESG mindset as modern investors and say, I don't want to go down the ESG route because it seems like A, there's ways to game the system. B, right? Like, it seems a little funny. So, but can I still align my values in a traditional portfolio structure where I can still achieve the performance I want, but also potentially at least feel better about my investments?
Yeah. The way I look at that is you may want to have a bucket because it's going to be hard to have it be all, you don't want it to be all ESG or all value, all ESG and values or all growth and ignore ESG. There's that huge crossover of the two. If it were me and ESG is an important part of your being and how you think about investing, how you think about living, then I would have a portion that is steered, whether or not it's done again by an outside manager, an ETF, or individual stocks. That is with thought. That's my ETF piece, and then the other piece is, all right, I want to grow. I got to beat inflation, so let me just have whatever the growth portfolio that fits my risk tolerance and age and income needs, et cetera, and have a blend of the two.
Sure. So you could even, perhaps if you had a prospective client come in the office and they're kind of ESG heavy, you might instead say, let's focus on, again, your risk and your time horizon, because there's a certain amount of money you'd need at retirement.
Right.
And perhaps if we can achieve those growth and performance metrics, there'll be money aside for you to be charitable.
Right.
Or to leverage that capital differently.
And that's another important aspect of financial planning and estate planning. You can achieve a lot of your goals and desires of ESG in how you set up your will, how you set up your IRAs. You can do qualified distributions once you're turn 73. You can do qualified distributions of $105,000 a year that comes right out of your IRA, goes to whatever charity you want, and it's not taxed. So that RMD is not taxed, which is great. I mean, you can be very charitable, and it can go to exactly those types of things that you feel are important to you in terms of a sort of an ESG flavor.
Sure. So there's different ways to achieving the spirit of ESG.
Exactly.
Without having to embrace
the
ESG economy, if
you will. Or think about charitable remainder trusts, where the income will accrue to the beneficiary, and then upon death, then that gets spread out to the charities of your choice, and that could have a very heavy, sort of a ESG emphasis of how you want that to go.
That's more personalized too. That's like,
absolutely.
Think about it, like it's almost like that seems like the way better choice is to focus on performance and growth, knowing again your time horizon, and then being able to personally, not only that, but like just even the devotion of that capital, if it is through qualified distribution or if it is within legacy planning, I feel like that money is more effective and more powerful towards your values because more of it's getting to where you want it to go.
Absolutely. It's really hard when, if you're going to set up a portfolio that's higher in ESG scores, that's nice, but I'm not sure that's going to have that much impact on the companies and how they behave themselves. I think, boy, does it really make a difference if you've left a $5 million estate and now you have cherry-picked the organizations that are most important to you, or people, or research, or whatever the case may be, to help kind of implement those very important social things to you.
Sure. So as a financial advisor, let's just kind of wrap this thing up. As an advisor, you probably get these folks walk in your office and they are kind of, focused on the ESG. They're saying, hey, I want to do this, this, and this. How do you have what probably could be a tough conversation to say, hey, we love the values that you're ascribing to, or we want to help you along that way. However, the math doesn't math.
Yeah, that's really what it comes down to. So if it's important to them and you're doing it because this is what, you get up in the morning and, there are things that are important to my value system and my ethics and everything else, then to say, okay, knowing that we're going to try and set you up for, this hunk of your portfolio that's going for growth and beating inflation, et cetera, that this piece over here is something that we can talk about. And maybe we can do some screens that have various different factors that incorporate ESG to do it yourself type of thing versus having somebody else do it. There are ways to do it. And there's actually a checklist. You can go down and try and align yourself of what are the growth metrics that are important to you. And then what are the values or ethics or ESG criteria that are important to you. And you go down this checklist and it tries to help you align your investments.
In a pragmatic way.
Right?
And I think that's a great segue to the next question. Really, there's inflammatory headlines, there's ideologies, there's politics. And you and I have talked about this before, emotions getting in the way, right, of your retirement dollars. So how do you kind of work with a client that comes in or they see a headline, they're like, I want to do X, Y, and Z due to this. How do you get them away from that emotional, irrational thinking and back in line? And look, sometimes advisors are therapists. We've talked about this, okay?
That's it.
So how do you manage that?
It's hard. It's hard. If they come in and they feel very strongly, there is the part of me that says, well, that is what they want and believe, but I'm also trying to convince them that that we need to have the blocking and tackling at least set up for you to achieve your goals, your investment goals. This happens, and it's happened obviously in the last year and a half, probably more than ever, about politics. And I try and walk away from that and stay away from that, but they come in blazing with, I'm the red hat, I'm the blue hat here in the United States. And that's a tough one because the evidence that's going back 100 years shows that the best returns of the market are the years when you've split. You got a red president, you got a blue house, you got a red Senate, whatever iteration. If you have all red or all blue, lower returns. High returns if you have a mix. And so that is, you want to talk about emotion, that brings in people with huge emotion.
Sure.
And trying to walk back that and have them not invest based on that is a challenge. It's a lot of tap dancing. But I always say the same thing to everyone. I'm not going to try and get my politics involved in your portfolio whatsoever. I'm not going to agree or disagree. What I will do is I'm the party of green money. I just believe in the business cycle, and a president or a House or a Senate comes in and you're at the top of a business cycle or a bottom of a business cycle. And whoever inherits that, you're either lucky or you're unlucky. And they can make tweaks and changes in some things that can affect the markets. But a lot of times if they, if there's things going on that does not affect the earnings of Procter & Gamble, then the market doesn't care. And that's what I try and,
Sure.
It would be the same thing of any of the other come in with real environmental hat on or a real, board governance hat on or whatever it might be to try and walk that back.
Sure. So that's a perfect way to wrap this up. I have one more question for you, and it relates to just advice. If you were to give one piece of advice to the modern investor, someone who has ESG on their mind, what would you say to them before they make a decision that they might regret?
What I would say to them is be aware that ESG really hasn't proven to be an outperformer. If you're doing it, it's because you have the love and the passion to want to have investments or part of your portfolio there. So just try and keep in mind they're different conversations. You're not doing that to try and necessarily outperform, but there's a good, you'll feel better at night. You will feel better in your life if you have some of that invested and you believe in that, then I'm all for it. So it's coming in and having a clear knowledge of what ESG is and what it's not.
Sure. I mean, for me, the takeaway really is like, it's okay to have a values-based approach and strategy. You ought to have values, but perhaps look to growth and performance and then be able to leverage that capital later in a more impactful, personalized way.
Right, right. And look, I mean, if you have growth companies and you have value companies. Just because you're a growth company doesn't mean that the environment or the social aspect or the governance aspect is not top of mind of that growth tech company or that growth healthcare company. So there's ways to skin the cat of getting, kind of your cake and eat it too.
Sure. Unless you're PETA, then you're not skinning any cats.
No, then you're not. That's true.
So many good nuggets. What a wonderful episode with Charlie. Thank you so much for coming on, Charlie.
You bet.
It was a pleasure. If you like what you heard from Charlie, make sure you look him up online, LinkedIn, and of course our website. If you like this episode, make sure you subscribe, drop a comment, and also make sure to share with your friends and family. Let's spread this wealth of information as it relates to ESG and values-based investing. Until next time, I'm your host of Dime After Dime. Thanks, Charlie.
You bet.